Most people make the same mistake when they start investing. They grow their ego before they grow their money. They want to make big profits immediately. They want to act like they are already rich immediately. But this game does not work like that. I am Tyler. And today, I am going to tell you the 8-step rule that I went through. Because the game you play with $500 is not the same as the game you play with $100,000. And the game you play with $1 million is nothing like the game you play with $1 billion. The question is this: what level are you on? And what do you need to change to move to the next level? When you first enter the world of investing, everything looks simple. There are only a few buttons on the screen: buy, sell, chart, price, up, down. But it is not as easy as it looks. At the first level, when you are a beginner investor, maybe you invest $500 into your account for the first time. It is not a large amount of money, but it matters to you, because now you are no longer just a viewer. You have joined the game. At this level, your goal is not to make money. Your goal is to understand the system. When you buy a stock, you are not just buying a price. You are buying a small piece of a company. How does that company make money? Why do people choose and buy its product? Why does the company grow? Or why does it fail? You start thinking about these things. The first lesson is this: investing is not about following every move. It is about learning how to wait in the right place for the long term. The second level is the regular investor level. Here, you no longer just put money in once and wait. You invest every month. It can be $500, $1,000, whatever fits your budget. What matters more than the amount is consistency and order. At this level, you start building a portfolio: index funds, ETFs, a few research stocks, some cash. Your money no longer spreads everywhere randomly. You have a plan. When the market drops, the first real test comes. Your portfolio can fall by 10%. You want to sell. But the lesson you need to learn here is this: volatility is not risk. Selling in panic at the wrong time is risk, and it means taking a loss. At the third level, your portfolio gets close to $100,000 or passes it. This is where the numbers start to feel real, because 1% is no longer a small move. It means $1,000. At this level, you do not only think about how much money you add, you start to understand compound returns. Money no longer grows only when you work. If the right system is built, money starts growing with you. This is where discipline comes in. You have a portfolio allocation. For example, 70% stocks, 20% fixed income assets, and 10% cash. You move with statistics, not emotions. The fourth level is the advanced investor level. When your portfolio reaches between $250,000 and $1 million, the game changes. Now, you do not only look at growth, you start looking at the income and return you receive. An extra 2% return is no longer a small difference. It can create thousands of dollars of difference per year. Tax efficiency, risk management, asset allocation, and long-term planning become more important. The question you need to ask yourself here is this: instead of asking, how much can I make? You start asking, if I lose, how much can I lose? Because as capital grows, protecting yourself from major losses becomes just as important as making gains. The fifth level is the high net worth investor level. When you reach more than $1 million in investable assets, the financial system starts treating you differently. You are no longer limited only to publicly traded stocks. You start facing new opportunities such as private equity funds, startup investments, and real estate partnerships. But the thing you need to pay attention to here is this: as opportunities increase, risk also increases. Some investments can be locked for 5 years or 10 years. You may not be able to pull your money out immediately. That is why you no longer look only at what the investment is. You also look at its structure, manager, risk, and time horizon. The sixth level is the professional investor level. When your capital reaches the range of $10 million to $100 million, investing is no longer a side job. It becomes your main job. A 5% return is no longer just 5%. It means $500,000, $1 million, or even more. At this level, you think about your portfolio not like an individual, but like a manager. Stocks exist for growth. Real estate exists for income. Fixed income assets exist for balance. Private investments exist for long-term growth. So every dollar has a job and a purpose. The seventh level is the institutional investor level. Now, you are managing hundreds of millions of dollars, maybe even billions. At this point, instead of choosing individual stocks, you decide where capital will be directed and where it will flow. Which sector will money go into? Which fund will be invested in? Which company will be supported? Which asset class will be reduced? At this level, money does not just participate in the market. It starts to influence the market. The eighth level is the billionaire investor level. Here, you no longer just manage a portfolio. You take positions. You buy large stakes in companies. Sometimes, you can even change the direction of companies yourself. At this level, opportunities are not open to everyone. They come through private meetings, major deals, and strategic moves. And here, investing stops being only about returns. It becomes about impact. Because the billionaire investor does not react to the market often reacts to him. But now, let's be honest. The biggest lesson of these levels is this. Everyone looks at the eighth level, but most people cannot even play the first level correctly. Someone who cannot manage small money cannot manage big money either. Someone who panics with $500 will be under much more stress with $500,000. Someone who starts without a plan makes even more mistakes as they grow. So today, ask yourself one question. What level am I on right now? If you are a beginner, learn. If you are a regular investor, build the system. If you are growing, protect your discipline. If your capital is increasing, manage the risk. Because the real point of investing is not only making money. The real point is becoming the man who can carry the money. I am Tyler. And on this channel, the goal is not just to look rich. The goal is to truly build.